Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks rose across the board on Thursday as Wall Street weighed signs of a resilient economy and the move by Federal Reserve Governor Lisa Cook to sue President Trump while the dust settled on Nvidia's earnings. And today we actually had a broadly green day driven by a whole bunch of factors. Nvidia was down 0.82% after its earnings. We'll talk about it a little bit later on, but Nvidia's earnings outlined very bullish momentum in the entire sector, and as a result, AVGO, AMD, Qualcomm, MU, software as a whole, semiconductor equipment manufacturers, hardware, really bullish. Infrastructure was also really bullish. Microsoft, Oracle, Palantir, they all gained. CrowdStrike gained on the back of its earnings. Apple was up 0.9% on some news that it's looking to acquire Perplexity or Minstrel AI. Amazon was up 1%, Google and Meta. Just a really solid day for the mega caps, except for Tesla, which was down 1%. And I think we need to name the Magnificent Seven to the Spectacular Six because there's just a difference between what Tesla's doing and what the rest of these mega caps are doing for the most part. And that really drove the rally today. It was very mixed price action in the rest of the market. There were winners, there were losers. This is what the sector analysis for the S&P 500 looked like. You could see losers were utilities, staples, healthcare, real estate, and materials, very defensive sectors. Everything else gained, everything from financials to tech to energy, communication services, with the S&P 500 up 0.36%. Gold also gained 0.73%. But all in all, the S&P 500 was up. The sectors that drive momentum were up, and we saw stocks gain as a result. It really was a day for growth, large cap, mid cap, small cap growth. And then value and core took it a bit on the chin, except for here in the large cap size where core was up 0.4%. But again, not a disastrously bad day. I mean, for example, mid cap core was virtually flat. Large cap value, largely flat. You could see a small cap value and small cap core were down 0.2% on the day. So nothing crazy, but definitely a day for growth, especially in the large cap space, in the mid cap space as well. And guys, the S&P 500 has officially hit 6,500. That's a crazy milestone. And the S&P 500 went less than 200 days before it went from 6,000 to 6,500. And in that time period, we actually had a 20% drawdown because of the tariff tantrum. Absolutely insane to see the price momentum we're seeing in the market right now. And a lot of the move we saw today, the all-time highs we saw today, was driven by some very robust economic data. The two big points were probably the initial jobless claims data right here and the GDP data. So initial jobless claims came in below consensus. That's good. You want to see that 229 versus 230,000. And we actually had downward revisions in the previous month. Very interesting. And then the big number here was actually the GDP print, right? So the second quarter GDP estimate came in at 3.3%. The consensus was for 3.1%. So we got a 0.3% up revision from the previous month. And the reason why we saw this is because real GDP was revised up 0.3 percentage points from the previous estimate, primarily reflecting upward revisions to investment and consumer spending. So the consumer narrative, not dead just yet, which were partially offset by a downward revision in government spending and upward revision in imports. So pretty much what we saw was a decrease in government spending, an increase in consumer spending and investment. So it does look like, Trump's pro-business policy is spurring on private sector investment, and that's leading to GDP inflecting up in a really solid way. Great economic data, very solid stuff. The labor market continues to remain as tight. Economic growth is actually accelerating. The stagflation bros, the stagflation bears are in complete shambles after this. Their narrative is completely dead. At the same time, what we also got today was the Treasury bought back $1.4 billion of its own debt. I thought this was very interesting. And then something else that moved the market was Nvidia. Now, it had its earnings, but also there was some news coming out that Nvidia is in talks with the US government to sell its Blackwell AI chip to China in return for a cut of its revenues. Jensen Huang said that it could be a real possibility. Now, this actually came out after the earnings call. Now, we do know that China is hesitant to go ahead and buy Nvidia Blackwell chips. So I think what Jensen needs to do is take a plane to China, sort some things out there, and then we will be good to go. And in that scenario, I think you could see upside to Nvidia's numbers. And after their earnings, Nvidia was down 1% here on the day. Very, very volatile price action. But if you want the full scoop as to what happened to Nvidia's earnings, you can actually go ahead and check it out on the second YouTube channel. I have a full update here, FinFluential Media. I'll leave it in the description below. Go ahead and check it out. We have a full update on everything. Is Nvidia at buy or sell? We have my fair value estimates. We dive into the earnings call, and everything in between. Now, looking at earnings that was on today, there was a number of names that reported. Dell Technologies reported their earnings. Now, the stock was down 4% here in the after hours, up 1% today. It beat on revenue, beat on EPS. The guide came in a little bit soft, and that's why we're seeing a little bit of weakness in Dell stock today. Webull was up 2.59% after being up 1.59% today. And I quickly perused their earnings. Revenues grew 46%. Growth is accelerating. Adjusted net income was 15.4 million. Margins inflected from negative 1.7% to 11.7%. Registered users grew 18%. Funded accounts grew 9%. Just an all-round stellar quarter right here. This company firing on all cylinders. Valuation is a little bit of a concern, but I'm going to tackle this company in the second YouTube channel. We're going to look at it today. We're going to look at Webull Corporation because I actually use the Webull app a lot to do all of my trading options. Everything is in Webull, so I do want to keep track of where this company is going. Ulta Beauty also reported their earnings. They beat on the top line, beat on the bottom line. You can see the stock was up 2.7% here. I haven't did a deep dive into the earnings, but the market seems to like it. IREN, or Iris Energy, ticker symbol IERN, had a massive guide higher. After it beat on the top line and the bottom line, the stock was up 12% on the back of this news. Affirm Holdings was up 10%. Now, very mixed earnings right here. You can see they beat on revenue, missed on EPS. The market looked at the guide and the stock rallied 9% even after being up 3% on today's news. And then Autodesk was up 9% as well after beating revenue, missing EPS estimates. I didn't look into the guide to see what they delivered, but I guess the market likes it. Stock is up 9%. The market is always right. And maybe the color behind this miss is really something that the market just dismissed and said, hey, next quarter, we might see a massive earnings beat. And then for everything we saw today, guys, there was 3,000 advances, 3,100 decliners. We saw net outflows in the NASDAQ and the New York Stock Exchange. The S&P 500 gained, but market momentum looks solid. And until these actually crack, the bull market continues. Now, guys, quickly looking at the charts, you can see a pretty positive day here for equities, led by mega caps. They outperformed, but we did have a green day in the Russell, mid caps too. But the S&P 600 profitable small caps took it on the chin. Growth obviously outperformed the value, but we are seeing a little bit of momentum here in some of the broader market in the after hours. Dow Jones up 0.16%, the RTY green as well, and then the S&P 500 and NASDAQ 100 slightly red, but inconsequential really. Internationally, European stocks fell, Middle Eastern stocks gained ever so slightly, China stocks gained, and Indian stocks pulled back a bit. Broadly a mixed day globally. Crypto was also mixed. Ethereum was kind of flat. At one point it was up a lot, but still holding these key levels, and Bitcoin up 1%, really bouncing off some key levels. We'll talk about it. Volatility was up 2.7%. The 2-year gained, the 10-year yield fell. Very interesting trade right there. And then the dollar was pretty weak today. TLT gained as a result. And then gold and silver were actually fairly positive on the back of the dollar taking a bit of a breather. Now, looking at the S&P 500, this is another weekly all-time closing high right here for the S&P 500. I mean, the week is not quite closed, but we're at weekly highs and we're at daily highs right now at the top end of our range. I mean, this looks like a very, very solid uptrend, just putting in higher lows, right? Higher highs into all-time highs. Like I've been saying the last couple of weeks, if we do get a September pullback, right, whatever that may be, this is just an opportunity to buy the dip because this price action looks very, very strong. So we'll be buying the dip all the way down. Even if we break some of these key levels, right, even if we make lower lows right here, ultimately, right, the key low that we want to hold, I would say, is this level right here, the 5,800 level. We hold that, right, because it was before we had this massive gap up. We hold that level, even if we do pull back, right, I think we just go ahead, buy the dip right here, looking again for those all-time highs. Do I think we're going to get there? Maybe. September can be a pretty volatile month, but as it is right now, fundamental picture looks good. The economic data looks good. We have rate cuts on the way, and that's actually going to support the broad market, mid caps, small caps, and everything looks good right now. I mean, the RSP put in an all-time high earlier this week. Not quite an all-time high today, but very solid price momentum. Again, higher highs, higher lows into all-time highs. Mid caps approaching 52-week highs, small caps also approaching 52-week highs, and they made that today. Absolutely insane price action across the board, and you love this. It's not quite the same for the NASDAQ 100, so you can see that ultimately what we're seeing is that the broad market is really leading the S&P 500 to its all-time highs, and that's exactly what you love to see. You can also see the Dow Jones right now is up here in the after hours, so very solid stuff for the market as a whole. This is just, guys, and when we get to all-time highs, if we start to see the market just trading sideways on the back of rotation into smalls, mids, smids, the broad market, that doesn't mean a pullback is coming. Rotation is the lifeblood of a bull market, and that will be the signal that we will go higher. So let's say in September, right, the S&P 500 continues to just trade like sideways in this range, okay? But we continue to see outperformance in the Russell 2000, the broad market. That is the signal to probably continue to hold, get long, because we will probably go higher into the end of the year, into 2026. Now, individual names that I do like, and I do like a lot of them. Firstly, Lemonade. I've been doing a lot of research into the stock. I think this is going to be a huge AI winner, but it's also in the financial space and the insurance space. And it may look overvalued on paper, but when you really do the deep dive, you know, what they're building out is criminally undervalued to the real value that this company will provide its users and to its investors. I really do love this name. Another name I do like is Lyft. This is criminally undervalued, guys. You know, Lyft trades at 6 times price to free cash flow. You can see we are somewhat staging a breakout. We did put in that double top right here. It doesn't look too good on the technical charts, but you know, we don't really look at technicals that much. And I think ultimately, as long as we hold, you know, this low, this $13 low right here, I think we just buy any dips we do get in Lyft. And I do think this is an attractive place right now. I think $16 is really good. I think you could see like $30 over the next 2 to 3 years for a name like Lyft. Another name that I do like is Pinterest. This is very interesting, right? This stock does about $1 billion in free cash flow right now. In about the next 5 years, it's going to do about $2.4 billion. Once the market wakes up to this massive free cash flow accretive nature of the stock, and it is fairly undervalued, I think this stock can see $70 to $100 very easily. So those are names I do like. In terms of European names, I do like Evolution AB, ticker symbol EVVTY. We probably are going to trade inside this range into its earnings. We'll trade at the high end, at the low end, and then go from there. But ultimately, we're waiting for its earnings, but I'm very bullish. I mean, it only trades at 11, maybe 12 times forward earnings. Incredibly bullish stuff. Now, looking at crypto, we see crypto catching a bit of a bid right here. Now, we were saying that this is probably where Bitcoin is going to, we previously used it as resistance right here. This is when we had the massive move to the upside. Now we're using it as support at this level. And generally speaking, if we just zoom out, you can see that Bitcoin likes to grab liquidity at the low end before shocking bulls to the upside. For example, right here, we've got a lower low. We grab the low end liquidity, right? And then we move to the upside. That's exactly what we're doing right now. We're grabbing the lower end liquidity, finding support, and we're going to move to the upside back to all-time highs. We did it right here as well, right before this massive move to the upside. So this is what Bitcoin does, right? Go ahead, grab this lower end liquidity. It's at a key support area. We do know that M2 Money Supply is saying Bitcoin will go higher. I want to target the 124, 125, potentially 130,000 mark here for Bitcoin to the upside. I think this is a great trade to get in, you know, to eke out 15 to 20% of alpha through the end of the year. Ethereum too, you can see this is the daily chart making higher highs, higher lows into all-time highs. Very solid stuff. As long as we hold this 4,400 area and ultimately the 4,000 area, right, I do think Ethereum would probably go higher. Now, guys, a very big trade that we're seeing right now is gold. It's trading right near the top end of the range. And I do think if we do get a breakout right here, we can use this area of support and then go from there. One thing I will say is that when the Fed cuts rates, gold outperforms equities in a very big way, simply because the abundant money supply. Gold is a store of value. It's an inflation hedge. And I think we might potentially see a breakout right there. Now, ultimately, right, we have used this like there's 1, 2, 3, a triple top, quadruple top. But I think once we break out of this resistance, that's just going to allow the bulls to get in. And then it's 4,000 onward and upward from there for gold and very similar commodities. But all in all, guys, look, we are expecting a little bit of weakness in September. But ultimately, even if we break to this 5,800 area, we want to remain constructively bullish. If we break below 5,800, that's when things can get a little bit shaky. But as it is right now, any dips we do get in this market by the dip, even if that dip occurs in September. Now, guys, diving into sentiment, this is the AAII sentiment survey. And what we saw last week was a slight uptick in bullish sentiment, a slight downtick here in bearish sentiment. However, we are still seeing elevated bearish sentiment through and through, even eclipsing bullish sentiment despite the market being at all-time highs. And this actually is a little bit of a contrarian signal, as this last bit of skepticism in this rally could actually push us to the highs that we need to capitulate to the downside. And I mean the highs right here. This overwhelming bearish sentiment could mean that in this final week of September, in the next week or so, it could push us to the peak that we normally see very early in September before we actually go ahead and see the typical seasonal weakness that we do get in September in the S&P 500. However, if we do get this weakness where we could be down as much as 2.5% by the end of September, it's a dip buying opportunity because earnings are stellar. Guys, after Nvidia's earnings, we're still sitting at about 12.9% in earnings growth. Fundamentally, equities look good. Margins actually improved significantly to 12.9%. Look at where we were at the start of earnings season. That is extremely solid. We're smashing the estimates. And if you actually exclude the energy sector, which is a bit of a dumpster fire, right, you're looking at like 14% earnings growth, 7.4% revenue growth. Very solid stuff. And the macro is really good as well. The economic surprise index continues to tick up after the solid economic data we got over the last couple of days. And this is ultimately the reason why you want to stay constructively bullish in the month of September through 2026, because we also have rate cuts on the way. 77% chance we get one in September, and it's very likely we probably will see consecutive cuts in consecutive Fed meetings through 2026. And just a little tidbit, this is what happens to the US dollar when the Fed starts to ease. Normally we see a little bit of strength in the dollar. We can see a little bit of weakness, but the most likely outcome is that when the Fed starts to ease, when it cuts rates, the dollar will strengthen ever so slightly. Now, looking at data for the rest of the week, tomorrow is really going to be dependent on inflation data. We get the PCE. I think that's going to come in at the consensus estimate of 0.3. The forecast is actually here 4.2, so that's very interesting. I think an inline print might see a little bit of volatility, especially at the release of the print, but we also need to be paying attention to personal income and personal spending. We're looking for a 0.4 and 0.5 number. And then with regards to earnings, there's no earnings on Friday, so that's pretty much it. But if you made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.